Okay, so welcome to the second part of our discussion of intercompany sale of inventories. So in this video, I shall be presenting some sample problems now for to discuss the concepts of intercompany sale of inventory. Okay, so we have here our first problem. So Percy Company owns 80% of the common stock of Smith Company. Therefore, si parent ay si Percy, then yung subsidiary ay si Smith. So, Percy sells merchandise to Smith at 20% above cost. So, yung selling affiliate natin ay si parent, si Percy, then yung buying affiliate natin is Smith. So, it's very important to determine sino yung selling affiliate. Kasi, di ba, when we compute consolidated net income or when we adjust net income, of the parent and subsidiary, i-adjust natin siya. So, i-adjust siya kung sino yung selling affiliate. So, in this case, the selling affiliate is si parent. So, during 2018 and 2019, intercompany sales amounted to 1,080,000. That's for 2018, and for 2019, that's 1.2 million. Okay, so at the end of 2018, Smith had 1/5 goods purchased that year from Percy in its ending inventory. Also, Smith's 2019 ending inventory contained 1/4 of that year's purchases from Percy. Okay, so there were no intercompany sales prior to 2018. So Percy reported net income from its own operations of 720,000 in 2018 and 760,000 in 2019. Also, Smith reported net income of 400,000 in 2018 and 460,000 in 2019. So neither company declared dividends in either year. Okay, so first requirement natin is to prepare journal entries necessary on the consolidated statement, work papers to eliminate the effects of intercompany sales for both 2018 and 2019, and also to calculate the net income attributable to parent or yung controlling interest in the consolidated net income for 2018 and 2019. Okay, so first, let's have the working paper eliminating entries for 2018. Okay, so the first entry natin is to eliminate the intercompany transaction or intercompany sale transaction. So for 2018, yung intercompany natin is 1,080,000. So we are eliminating that. So you debit sales, credit cost of goods sold for 1,080,000. Okay? And then, for the second entry, second entry natin is to eliminate the markup included in the ending inventory reported by Percy, the buying affiliate. Okay, I know the Smith, the buying affiliate. Okay, so since 1/5 daw remained in the ending inventory, therefore the computation for the unrealized gross profit, so that's actually 1,080,000 times 1/5 to get the ending inventory, then times 20 over 120 to determine the markup. Okay, so therefore the markup included in the inventory is 36,000. So to report inventory at cost, so we are to eliminate the markup, no? So let's say that debit to cost of goods sold, credit inventory for 36,000. So since there are no intercompany transactions prior to 2018, therefore walang realized profit in the ending in the beginning inventory. Okay, so for 2019, di ba, the cost of goods sold is actually the sales actually is 1,200,000. Yan yung sales natin. So therefore, we are to eliminate intercompany sales of 1.2 million. That's actually a debit to sales and a credit to cost of goods sold for 1.2 million. Okay, and since 1/4 of the inventory, no, remained in the balance sheet of Smith, no? So therefore, yung markups ending natin is computed, no, by 1.2 million times 1/4 to get the ending inventory. To determine the markup, you multiply it with 20 over 120. Okay, so therefore, the markup is 50,000. Ito yung markup sa ending inventory na report ni buying affiliate. So, to eliminate the profit included in the ending inventory, we'll debit cost of goods sold credit inventory for 50,000. And then, to eliminate them and the profit included in the beginning inventory of the buying affiliate, so diba, we have recorded 36,000 na unrealized for 2018, which will be considered realized in 2019. No? So to eliminate the profit included in the beginning inventory of the buying affiliate, we'll debit retained earnings, credit cost of goods sold for 36,000. Okay, so therefore, to compute for the consolidated net income, no, attributable to parent or yung controlling interest in the consolidated net income for 2018 and 2019, we have here the formula. No? So since we have net income from own operations na, no, for 720,000 for Percy and then 400,000 for Smith. That's 1,120,000 in total. Okay? And then, since this is a downstream, mag-adjust tayo kay parent, being the selling affiliate. So, i-deduct natin yung unrealized profit in ending inventory kay Percy, kay parent. So, therefore, we have consolidated net income or adjusted net income ni Percy na 684,000 plus kay Smith na 400,000. Therefore, we do have 1,084,000 as our consolidated net income. And we deduct NCI share in the net income of the subsidiary, no, is actually 20% of the 400,000, no. Kasi yung share ni parent sa net income ni Smith is 80%. So therefore, yung share ni subsidiary is 20, ni NCI is actually 20%. Therefore, 80,000 yung NCI share the net income ni subsidiary. So, from your consolidated net income, deduct natin yung NCI share in the net income of the subsidiary, then you'll have net income attributable to parent of 1,004,000. Okay? For 2019 naman, no, for 2019, so Pearson reported net income of 760,000, and then Smith reported 460,000, no, to get total of 1,220,000. Okay, so then we are to deduct unrealized profit in ending inventory kay Percy. Di ba we have computed that kanina? Yung 50,000 unrealized profit in ending inventory plus the realized profit. So yung unrealized last year will be considered realized this year. So actually 36,000. No? So again, kay Percy mo siya i-deduct kasi nga si Percy yung selling affiliate or yung parent yung selling affiliate. Okay, so therefore, our consolidated net income, yung adjusted net income ni parent or ni Percy is 746,000 plus kay Smith na for 60,000. So we have 1,206,000. Okay, as your consolidated net income. Then, to determine the NCI share in the net income of the subsidiary, that's actually 460,000 times 20%. So we have 92,000. Okay, so 92,000. So therefore, our consolidated net income attributable to the controlling interest or net income attributable to parent is actually 1,114,000. So from your consolidated net income of 1,206,000, you deduct NCI share in the net income of the subsidiary of 92,000 to get your net income attributable to parent of 1,114,000. Okay. Okay, so let's have our problem 2, no? So our problem 2, we have Peyton own 90% of the common stock of Sanders Company. So meaning to say si Peyton yung parent at saka si Sanders yung subsidiary. So Sanders Company sells merchandise to Peyton Company at 25% above cost. Okay, so therefore, yung selling affiliate natin is si Sanders, which is a subsidiary. Then yung buying affiliate natin is si parent. So therefore, it's an upstream transaction. Okay, so during 2018, 2019, sales amounted to 800,000, 1,020,000 respectively. So at the end of each year, Peyton Company had in its inventory 1/4 of the amount of goods purchased from Sanders Company during that year. So Peyton reported income of 1.5 million from its independent operations in 2018 and 1,720,000 in 2019. So Sanders Company reported net income of 600,000 each year and did not declare any dividends in either year. So there were no intercompany sales prior to 2018 and 2019. So our first requirement is to prepare the necessary working paper eliminating entries for 2018 and 2019. Also to compute the non-controlling interest to be deducted in the consolidated net income or yung share, non-controlling interest share in the net income of the subsidiary. And then also to calculate the controlling interest in consolidated net income or yung net income attributable to parent. Okay, so first, for 2018, to eliminate the sales, so we have sales name of 800,000, no? So we'll debit sales credit cost of goods sold for 800,000 to eliminate the intercompany transaction. And then the second entry is to eliminate the markup included in the inventory of the buying affiliate. So since the buying affiliate here is a Payton, yung parent, and it was stated that one-fourth remained in the ending inventory. Therefore, to get the ending inventory, so 800,000 times one-fourth, no, that's actually 200,000. Then, to get the markup, i-multiply mo lang siya times 25 or 125. Okay, so you have 40,000 as your markup or yung unrealized profit included in the ending inventory. So for 2019, we have sales, intercompany sales of 1,020,000. So we are to eliminate that as intercompany sale. No, so it's a debit to sales for net cost of goods sold for 1,020,000. Okay, since one-fourth yung remain in the inventory for 1,020,000, so that's 1,020,000 times one-fourth times 25 or 125, no, to get the markup included in the ending inventory. So you'll debit cost of goods sold, credit inventory for 51,000 to eliminate the profit included in the ending inventory of the buying affiliate. Okay, so and then the third entry, 'di ba, is to eliminate the profit included in the beginning inventory of the buying affiliate. So, 'di ba, last year we've recognized 40,000 as our unrealized profit in the ending inventory, which will be realized in 2019. So, since this is an upstream transaction, so maapektuhan si non-controlling interest. Okay, so maapektuhan lang naman si non-controlling interest if yung transaction is a upstream. It's an upstream transaction. Kasi pag downstream, wala. Di ma-epektuhan sa non-controlling interest. Okay, so to eliminate the profit, including the beginning inventory of buying affiliate, it's actually a debit to retain earnings and non-controlling interest. So, yung ano natin, yung 40,000 split natin based on control percentage. So, actually, 40,000 times 90%, yun yung share ni ni parent. Tsaka yung share ni subsidiary is actually 10%. So, 40,000 times 10%, we have 4,000. Okay, so, yan siya. So, to compute for the consolidated net income attributable to parent, and then the NCI share the net income of the subsidiary. No? So, you have here, yung kay Payton, net income niya is 1.5, then kay Sanders is 600,000 for 2 years. So that's actually 2.1 million. And then since it's an upstream transaction, so magdeduct lang tayo ng unrealized profit kay Sanders. Okay, so yan siya. The consolidated net income is 1.5 plus 560 kay Sanders. So we have 2,060,000. Then from 2,060,000, i-deduct natin yung NCI share na net income of the subsidiary, no? And the amount of non-controlling interest will be deducted from the consolidated net income is actually 560,000 times 10%. That's actually 56,000. So therefore, you have net income attributable to parent of 2,004,000. Okay? For 2019 naman, okay, so kay Payton reported 1,720,000. Kay Sander naman reported 600,000. So for a total of 2,320,000. So deduct natin yung unrealized profit in the ending inventory was actually 51,000. So, nakapit natin kanina. And then, add realized profit in the beginning inventory of 40,000. So, you have consolidated net income of 2,209,000. Okay, but our non-controlling interest in the net income of the subsidiary is actually 589,000 times 10%. It's 58,900. Okay, so therefore we have net income attributable to parent of 2,250,100. Okay. So, ito yung sagot natin. 56,000 for 2018 for the consolidated net income. or NCI share the net income of the subsidiary, and the net income for attributable to parent is 2,004,000. Also, for in 2019, we have NCI and net income of the subsidiary of 58,900 and a consolidated net income attributable to parent amounting to 2,250,100. Okay, so that's it. So, yun siya, no? So, since this case, diba, the selling affiliate is the subsidiary. So, therefore, we've deducted the unrealized and realized. We've adjusted, no, from the net income of Sanders, being the selling affiliate. Okay, so for our last problem, so we have here, no, so P Corporation acquired 70% of the voting common stock of S Company at a time when S Company book values and fair values were equal. So separate incomes of P Corporations and S Company for 2015 are as follows. We have here, sales, cost of goods sold, operating expenses, and separate income from own operations of P and S. No? So PC parent and CS subsidiary. No? And then, intercompany sales from S to P for 2014 and 2015 are summarized as follows. Okay, so therefore, it's an upstream transaction kasi from S to B man. Okay, diba? So, from the selling affiliate is si subsidiary, and then yung buying affiliate is si parent. Okay, so you also have intercompany sales at cost and at selling price for 2014 and 2015. Also, the unsold at the year end. So, yan siya. So, the requirement is to compute for the consolidated sales, consolidated cost of sales, consolidated net income, and net income attributable to parent. Okay, so first, to compute for the consolidated sales, we have sales of parent, okay, which is 633,600. The sales is subsidiary, that's actually 350,400. So deduct the intercompany sales at billed price for the current year, which is 2015. Therefore, we'll deduct 264,000. So therefore, our consolidated sales is actually 720,000. Okay. Our consolidated cost of goods sold naman, we have here consolidated cost of goods sold reported ni parent. Yan, 384,000. Also, cost of goods sold reported ni subsidiary amounting to 192,000. Then, deduct natin yung intercompany sales at billed price amounting to 264,000. And then, we are to add unrealized profit in the ending inventory. So, yung ending natin is based on the intercompany sales at 2015, di ba? So, that's actually 264,000 na selling price minus 168 na cost. It's actually yung gross profit. So, since may 40% unsold at year end, therefore, may 40% din na markup na hindi pa na-realized. So, you have here 38,400 as the markup. Also, we are to less realized profit in the beginning inventory. So, yung beginning inventory natin is based on the 2014 sales. Diba? So, we have 374,400 less 240,000 times, that's actually the total gross profit. Yung difference yan times 30% to determine the profit included in the beginning inventory. So, we have 40,320. So, from there, no, the consolidated cost of goods sold is actually 310,080. 310,080. No? Yan siya. As to computation of the consolidated net income, no? So, for 2015, yan siya. So, you have net income from all operations for both, P and S. P and S. Okay. Yan siya. So, kay P is 134,400 and kay S is 62,400. Okay, so, since this is an upstream transaction, so yung unrealized profit ending inventory, yan siya, na 38,400. Ending inventory, and i-deduct natin, and then i-add natin yung unrealized profit at the beginning inventory. It's actually 40,320. Yan siya. I-add natin. So, realize. Unrealized is i-deduct. Ang realized is i-add. Pag we are computing adjusted net income. Okay, so, therefore, the consolidated net income is actually 198,720. No? Yan siya. This is our consolidated net income, 198,720. Okay? Then, i-deduct na lang natin yung NCI share, no? And the net income of subsidiary is actually 30% of 64,320. It's actually 19,296. And then we have our net income attributable to the parent amounting to 179,424. Okay, so that ends our discussion for intercompany sale of inventories. Okay, so thank you.